morning call video for Thursday, April 18th. Well, we did get a down day in the markets. We took back everything what we put on the board green the previous day. Dow down 138, S&P down 22, NASDAQ down 59, gold down 3. When you have markets that don't remember, basically we have an up day, down day. Markets seem to be carving a top out here. We're still not calling it top right now at this moment, but there's further evidence that the markets seem to be actually having a major trend shift, at least for the short term. We are coming into seasonal weakness in the equity markets. We are right now in the middle of April. So we're getting into that seasonal weakness, sell in May, go away type mentality. And it would not surprise me if this market starts to correct. Now, there are major signs that the market is ready to correct, but we still need some further evidence. We'll show that to you in the charts right now, but looking better and better for a correction. When markets run up and can't hold any gains and they start breaking key uptrend channel support areas, that is a trend shift for me, and I'll show that to you in the charts as well. In the overnight session, we still have a weakness going into Asia. Just kind of follow through about global concerns in the forefront here, and we do have China's house prices came out. They continue to rise, so they continue talking about a housing bubble in China. Probably is, and we are now up 2-3 handles in the pre-market while I'm recording this. So kind of quiet. Now, don't forget, we have options expiration, which comes out tomorrow. And we did have a down day on Monday, an up day on Tuesday, a down day on Wednesday. We'll see what happens Thursday and Friday. Maybe kind of quiet going into the 2 days, and probably a drift higher. And we'll see. But we did have some volatility yesterday. It was enjoyable to see markets moving instead of just slowly grinding higher. So be on your toes. Volatility is starting to pick up. That's great for the day traders. And let's see if we can bank in some of these great profits here with some of these trades that are happening in front of us. All right, so let's get into the indicators, and then we're going to roll right into the NYMO. We're still stuck in this range here, down 36, up 30. So once we break this area here, up here and here, we'll start getting into, you'll see volatility increase and start to pick up even further. And that's when we'll start looking for some oversold bounce plays. But as of right now, markets are ready to move lower, and they have plenty of room to move lower. Here is the, here's copper. And let me get that copper for you. And I kept saying, guys, be careful. If you don't think copper is going to take down equity markets, you really have to think again. This is a really bad price action chart. I would not like to see this if I was long. Big engulfing red candle. And as well as you know, we all know that the precious metals are in deep trouble right now. And equity markets at their highs. And you have other sectors, which I'll show you as well, starting to break down. Not a good sign if you're a bull. Okay. Now, here is another thing that I've been showing you for the last, for probably about 2 months, stating stocks aren't moving, the ETFs are moving. So if you can see here, we broke a pivotal spot here on the stocks that are above the 50-day moving average, no more. So this is a big concern. 1550 here, as you can see here in the S&P cash. 1550 break, this is a big support area. We'll start making lower lows and lower highs. As we were before, we were making higher highs and higher lows. Higher low from here, here, and here. Now we're starting to roll. So there is a trend shift that's taking place. Hasn't fully happened as of yet. And remember, we can roll over quite substantially and still be in a bull market. So this should be welcoming to the bulls anyway. You don't want to continue to just keep grinding higher, because when it does correct, it's going to correct violently. So this is telling me stocks aren't moving, and with the equity markets here, ETFs are. So that's not a good sign as well. So you want to use caution. Here's another red flag that I'm showing you. And then here's the VIX. VIX did break out of its Bollinger Band. So volatility is picking up. Fear is creeping into the markets. Take a look at the CBOE. Actually was bearish here, 119. So market participants, traders, managers are starting to buy puts on their portfolio. So that is actually another sign to say that hey, we're having a problem with the markets. Let's start hedging, which I think is a great idea if you have a portfolio of longs. Take a look at this. I showed this to you about several months back. This is the ratio chart of the Russell. Here's the Russell here, and here's the Russell with the JNK plotted. So this is an average. Take a look at this here. Look at the drop here. Take a look at the drop here. Same thing. Here we had a small little drop, and now we're fastly approaching again. So if history repeats itself, we should be looking at another decent drop. Again, this is just a chart, but let's see what happens. Let's see what happens in the next couple of weeks. What starts to take shape. Okay, uptrend line, S&P cash. We have a big down day, an up day. We took back all of Tuesday's gains on Wednesday, and now we closed at the lows from these from the two previous days. Now, 1550 becomes more important than ever, because if 1550 breaks, you're going to see your next pivotal support is going to be 1530, which is right here, which is this sideways consolidation and this horizontal trend line, which coincides nicely with the 50-day moving average. So a break below 1550, you might want to write this down. 1530 is going to be your next support area, okay? That's going to be in the cash. Now, in the spiders, same situation. We're still holding this uptrend line, okay? Now, this is one of the followers. We touched the 50-day moving average at the lows, and then we bounced back to close just under the low of 155. 155 would take us down to 153.70, and that's going to be that next pivotal support area, which is that small gap up. If you could see, we have gap support 153 to 153.70. That's going to be your gap support area. And again, a breach below that, we break the 50-day moving average. You're looking at these next pivotal lows, which will come in right here, 149. And then, of course, the big target would be the 200-day moving average at 145. Okay? Now, here is that intermediate, that real short-term intraday pivotal low that I'm watching, and I've been stating 153.65. I put this in the dark red, and that's that gap that we're showing you. And this is a big area here. This also coincides with S3. If that gets taken out on a closing basis, you'll see that 150, 150 in a heartbeat. Okay. Now I plotted the Fibonacci retracements here the other day, and I wanted to show you how nicely we took the low from here, from the high, and we had a 61.8% retracement, hit it right to the penny, closed right at it on Tuesday, and as you can see, what happened, held nicely. We gapped lower, and then we traded lower pretty much most of the day, and then we had a short covering bounce at the end of the day. Okay, and this is exactly why I like using Fibonacci. Real simple, don't have to get really heavily into it, but it's a nice way of knowing, okay, where have we retraced from, where are we going? You know what I mean? So it's a nice little spot where we could have actually literally taken an objective short on the market itself. 30-minute, just to let you know, just to show you where we are here. No change, but if you could see that we're back into this sideways consolidation channel that we've been in. So we rallied out of it, we came back in it, we popped out briefly, now we're back in it again. So this little line at 153.65 is going to be key, because that's that long-term horizontal trend line support, goes way back. This is going to be big. So that you can see here, the same thing, 153.65, all the way back, all the way into March. So if that gets violated and gets breached on a closing basis, you're going to see 150, 149.90 in a heartbeat. Okay, so just write that down for your intraday trading. IWM Russell broke this lower trend line, this lower uptrend line, uptrend channel support is broken. And mind you, I looked at the weekly chart as well. We are out of that channel on a weekly chart. So that is not good for the bulls if you are a bull, or if you're looking to continue to buy this market up in these areas, thinking that the market's going to go higher. And I think the market's in trouble, and I think the market needs a correction anyway for the markets to move higher. So, guys, if you're looking at the IWMs, as you can see, one of our leaders, real weakness. And I drew this, put this out on Monday. Look at it, hit it right to the penny, and then bounce back up to close there. So again, Monday's close will probably get you past the below the 89.20, and then reevaluate, and this would come to the 200-day moving average easily if this horizontal trend line is broken. So we're going to see that. So again, one of our leaders outside of the channel, not good. Take a look at the transports outside of the channel is long-term trend channel, not good. Big engulfing candle. Again, Monday's low is going to come into play this week. That's what I'm watching on Monday's low, 104.85 on the transports. And that's one of our leaders as well. XLF. Now, XLF is interesting. A lot of the banks are getting hit the last couple of days. JP Morgan, Goldman Sachs, a lot of these banks, Bank America, they're all starting to get hit. Now, they had a great run, and we have this big bearish rising wedge, as you can see here. And again, it is only bearish if it breaks and closes below this trend line. And then really what happens when they break below it, they usually give one or two up days, weak bounces. That's when you want to get short on the back test, not on the break lower. Now, intraday is different. But you can see this little area here. This is where I'm watching 1795. Is break and close below that, I'm going to be looking to get short the weakest bank out there. And that's what I'm looking for in the banking sector. Okay, diamonds actually held up. One of the ETFs and one of our followers that's actually holding up nicely. So, but again, if everything else goes, the Dow will follow. There's no question about it. So just keep that in mind. And lastly, we have Apple and some semis. Now, Apple, I said on Monday, when I did some analysis over the weekend, I did Max Payne, and I was looking for the pin. I said Apple looks like a 400 pin. And you can go back on my videos, and I've stated that many times. I said it looks like a 4. I know it seems far-fetched when it was trading at 420 and then 427 on Tuesday. But sure enough, Apple broke the 420 support, and I said you're going to see 400. And then a break below 400, you're going to see one of these. Now, I wrote this months back, and I always continue to keep this just for reference. So that 200-day moving average is going to be the next target below 400. Now, if that breaks the 200-day moving average, all bets are off on Apple. I would not be looking to accumulate it until Apple's price action would get back above the 200-day moving average, okay? So once the 200 is breached, a lot of funds that are still holding Apple will sell regardless if it broke below the 200-day moving average. So do not accumulate Apple at anywhere of these prices unless it breaks below and stays above the 200-day moving average. We will reevaluate when it gets down there. Now, I mentioned it, the 400 pin, and I gotten a few emails. Oh, you kidding me? You're crazy. It's not going to get down here. It's stock trading at 427. Nothing is crazy, especially in the markets that we have, this crazy market. So, and again, a $20 move in Apple on a $400 stock really isn't that crazy. Apple has an average true range of, I believe it's $17 to $22. So, and it could move that in any given day. So we're basically there. We basically hit our target. If you guys were looking to buy puts on that, hats off to you. I know if you guys made a lot of money in the Apple on that 400 pin. Not thinking, be honest with you, I didn't even think it was going to get to 400. I was thinking 415. I think I mentioned on the video 410, but 402. I think Apple actually hit that. I'm not too sure what the low was yesterday. But anyway, actually, yeah, Apple did breach it and went down to 398. It looks like I didn't even see that. Broke that, and we have that head and shoulders pattern. Here, head, left shoulder, right shoulder. So Apple's in trouble. Now it needs to get back above 420. Like in the next couple of days. If Apple doesn't get above 420 next couple of days and take back this bearish candle, then I think there's more downside in Apple, and you're going to probably look at the let's say 350, 370. Okay, now next, SMHs in trouble. Same thing. We have horizontal line. I did have that head, left shoulder, right shoulder, and then we had this head, this shoulder test of this right shoulder and failed, and now we're breaking back down again, close below this neckline. So let's see where it takes us the next couple of days. I think the next couple of days is going to be a little slow in the trading, unless something obviously geopolitical happens or any negative news comes out of Europe. So I think it's going to be a little slow. So only because of options expiration, but we'll see. I mean, anything can happen here, so let's be on our toes and be ready for our trade selections. Here's the cues. Lastly is the cues, guys. All right? Have a great day, everybody. Again, remember, options expiration is on Friday. Things get a little tricky in the next couple of days, so, you made some money the first 3 days of the week. Take a step back a little bit, reevaluate, and try to really pick the best trades you can. Volatility is here actually, and I'm excited about that because there's a lot of trading to do and a lot of catching up to do since we've been slow, all of January, February, and a good part of March. All right, guys, have a great day, and we'll talk to you tomorrow. Take care.